We did it. Bitcoin crossed the magical 100,000 threshold mark, both in the US dollar and now in the euro. And there are several key events that took place this year as to why this happened. Stick around in this video to learn more about them and to find out where Bitcoin is going to next. The first key event this year took place in April, and that is the Bitcoin halving. The halving is famously there every 210,000 blocks, and that's actually reducing the block subsidy and therefore making Bitcoin more scarce. You have less Bitcoin to mine and find each day. If you have an increase in demand who actually are willing to buy these Bitcoin, the only direction that an asset can then go is up because you have more demand than sell pressure. The halving was also a key event because we learn more about the 4-year cycles each time they happen. I also made a video about this. I'll link it below, as well as the video about the halving. And all of these scarcity talks led to some key figures who are interested into Bitcoin. See, things like the Bitcoin halving are part of Bitcoin economics. You have an asset that's scarce in its nature. 21 million coins is the max supply you're gonna have. It gets reduced every 210,000 blocks, so you have less to find. If demand stays up, it becomes more valuable. And that more valuableness is then equal to actually more eyes that are keen to look at Bitcoin. One pair of these eyes came out of the Republican Party in this election cycle in the US, and that has been the Trump camp. Trump in Nashville announced that he's supporting the strategic Bitcoin reserve bill being put forward by Senator Loomis, and that he has seen the value of Bitcoin because it is an asset the US should be dominating in with their vast energy resources and the mining industry, and generally speaking, the Bitcoin industry being quite central in the US. And that political shift of the US now in 2025 potentially adopting the Bitcoin standard and having a Bitcoin stockpile also led to reaction in other big political circles. Russia is now keen on actually either mining Bitcoin and putting it on the balance sheet, or there's also some legislation that is interested in actually using it as a reserve currency. And you also had news out of China who would actually claim Bitcoin to be property and not just an investment, meaning it has the same nature and state as gold or silver, can't be seized. That's a bit different in China. I mean, at the end of the day, the CCP can seize a lot of stuff, but let's leave this out of the room. And therefore, it's much more of an established asset now. It remains to be seen whether China also wants to go the way with a strategic reserve bill. That's a lot of speculation currently. However, which countries there is not a speculation is, for example, Brazil, where there's also a legislatory proposal to actually use it. And we have states and cities such as, for example, Texas, Pennsylvania, or the city of Vancouver, who have prominent political figures who have realized the potential of Bitcoin. All of this political pressure, where you now see good statements being put out, where people have finally realized the potential of Bitcoin, also led to the third key interest, and that is the regulatory framework. Under the Trump administration, he proposed to make the most crypto and obviously Bitcoin-friendly legislation out there to actually attract businesses and to utilize this new form of technology and money. He has also announced key chairs and key people in his administration that are very Bitcoin-friendly, that are very eager to actually also go a step further and to actually use the momentum of the elections now and make America the power hub for Bitcoin. There is actually one continent in the world that has already had a good framework, and that is over here in Europe with the MiCA regulation. They were the first ones to put that out. However, ever since putting it out, they've slowly been hitting the brakes, and we have to also wait for 2025 to see how that evolves. But just having the framework here in Europe, now in the States, other countries that are willing to adopt in the political sense, make Bitcoin more appealing, and especially more appealing for one key investor group. And that is institutional adoption. We did see the launch of the spot Bitcoin ETFs earlier this year, the most successful launch in history. The IBIT BlackRock spot Bitcoin ETF alone has actually overtaken their own gold ETF within a span of 10 months. An incredible performance. It took almost 6 years for that gold ETF to reach these heights. And the Bitcoin one just did it in a few months, in less than a year actually. And all of that exposure now to Bitcoin on Wall Street has also led to more interest by institutions themselves. Why? Currently, but that is subject to change with the regulation, a lot of banks, institutions, hedge funds are not allowed to hold Bitcoin outright. And if they hold it outright, they can't really do much with it for their clients. They can hold it on their own balance sheet, but not in the name of clients. However, with the ETFs and these new institutional products, clients of them have now the opportunity to gain exposure to Bitcoin, mostly to utilize the Bitcoin price, because that's what they see with the volatility. But that's a step in the first right direction because they need exposure. They need to tip their toes in to actually also start using the asset. And that positive influence led to the fifth point, which is market sentiment. We've suddenly seen one of the most vocal critics in Larry Fink praising Bitcoin to be a store of value, a flight to safety, something you should have a certain allocation in. BlackRock, by the way, is recommending a 2% allocation in your portfolio to Bitcoin. We also had other key investors such as Paul Tudor Jones, who was on national TV saying Bitcoin, gold, and silver are hard assets which you need in this current economical environment. I'll get into that in a second step then, because they're actually fighting off inflation, they're fighting off money printing, and they are decoupling from the traditional markets. All of this positive sentiment also led to people like Jerome Powell himself, the Fed chair, to say he doesn't see Bitcoin as a danger to the US dollar yet, I would add, but he sees this as a competition to physical gold because it has all of these attributes. Scarce in its nature, it's predictable, it's disinflationary. And to have the Fed chair actually admit, like, yeah, it's not a danger to us itself and the US dollar, he kind of has to say this at this point, but it is a potential component for gold. That is a huge mood change. And that is something you start picking up also from TradFi and Wall Street, which are suddenly more and more interested in Bitcoin. And speaking of economics beforehand, that is the sixth point and a key point this year, let alone. We did see the reduction of inflation, depending a bit how you measure that basket, but we did see a comeback now. And the only thing that central banks can do now is, because you get into economical pressure, is to actually print money again, to ease the system with liquidity and to flood it with green dollar bills in the hopes that people will actually pick up investments again. We did see this in the stock market and in equities in general. They started to rally again, but where we really saw the impact was with Bitcoin. Why? Ever since the start of the year, Bitcoin has been on a tear. The ETFs helped, the political pressure and everything helped. But now investors who are suddenly there with more money, and that's both institutional and retail, realize this Bitcoin thing is on a tear, it's going up. There is all of this positive change. There's actually also a legal framework and a regulatory framework coming in. We should probably allocate. And if you then have giants such as BlackRock, Larry Fink, Jerome Powell, whoever on TV and in the media saying you should probably allocate X, Y, and Z to this, there's a high likelihood that people will actually use this excess cash and this excess liquidity that's in the system now and allocate. And all of this allocation, political involvement, regulatory clearness has actually also led to better technological developments in Bitcoin itself. The whole technology stack is much more advanced than probably 4 or even 8 years ago, if we measure now by halving cycles. And that makes also adopting Bitcoin much, much simpler. Institutions now have the ETFs to gain exposures, and regular investors have more simplified access to Bitcoin, such as with the Relai app, where it's quick and easy to create an account, buy Bitcoin, and be the sole controller of that Bitcoin because you hold it in self-custody. More technological advancements in the scaling solutions are also there, the Lightning Network, Liquid, etc. And the more you have that, the easier it is for people to get into it. And if demand stays the same and the asset is just getting scarcer by the minute, there is the direction of a price that continues to go up. And it remains to be seen now where that top is going to be. But what do you think? Are there other incidents as to why Bitcoin reached 100,000, whether that's in dollar or euro? Let me know in the comment below, and I look forward to seeing you in the next video.